Hey, welcome back to another episode of our City by City Market Pressure Review series. And today we're looking at Australia's second largest inland city, Toowoomba. Toowoomba is less than 2 hours drive from Brisbane to the west. In the past 1 year, growth has slowed down a bit. But moving forward, will the slowdown continue, or we can expect a good amount of growth? Let's try to find out with 10 charts today. Before we go through the charts, if you're here, chances are you're serious about property investment, whether you're just starting out or looking to scale up. But research itself is not enough. If you're ready to make smart and data-based moves, why not take the next step? InvestorKit offers a free 15 minutes discovery call. No fluff, no pressure. It's just a quick chat to understand your goals and see if we are the right fit to help you invest with confidence and build a high-performance portfolio. If you're interested, head to investorkit.com.au or check the show notes below. Now, let's get started. Just as usual, we'll be going through the economic and demographic trends, the sales market trends, and the rental market trends. And based on what we've seen in the charts, we'll be able to tell whether Toowoomba is going to slow down or continue the healthy growth. Chart 1 here is an overview of Toowoomba's market performance. As we have mentioned, Toowoomba has performed so well over the past 5 years. That is why its rental yield, affordability, and growth cycle has declined from a strong position to a more balanced or average position, 3 out of 5. But the price pressure and rental pressure are still scoring strong, 5 out of 5. And in fact, we're seeing higher pressure in both the sales market and the rental market than a year ago. And I will explain more with more charts later on. Chart 2 here is the migration trends and the population growth trends in Toowoomba. Population growth has slowed down a bit compared to the previous year, but it is still strong, especially if we compare it with 2018 to 2020, the years just before the pandemic. This improvement in population growth is contributed by both the internal migration and the overseas migration. Net internal migration improved from negative to hundreds of people, and at the same time, net overseas migration doubled in size. So clearly, Toowoomba's affordability advantage and the improved infrastructure, connectivity, livability, and the abundance of job opportunities are attracting more people to move and live here. And this will make sure of sustained housing demand in the coming years. So I just mentioned the abundance of job opportunities. Why did I say so? As you can see in chart 3, the unemployment rate in Toowoomba has been trending downward ever since 2020, and the high interest rate didn't really affect Toowoomba much. The number of job ads has declined a bit in 2023 as the interest rate went up, but it is now stabilized at a much lifted level compared to the pre-COVID average. So the active job market indicates a resilient and thriving local economy, which would form a solid foundation for its housing market growth. And now sales market trends. In chart 4, we see that the median house price has grown steadily over the past year, achieved an 11.5% annual growth. Not as impressive as how it performed 2 to 3 years ago, but it is still quite strong growth, well above average. But in this chart, what I want to show you the most is the blue line, the days on market. Since the end of 2024, days on market has been actually trending downward. That is a sign of increasing market pressure, meaning that it's possible that the slowdown in price growth could come to a pause in the coming few months. And another piece of evidence supporting the increasing market pressure is inventory. As we can see in chart 5, number of listings has declined in 2024 and the sales volume didn't decline as fast. So as a result, inventory actually also declined. Now it is sitting around 1.6, 1.7 months of stock, which is much lower than the balance level of 3 to 4. So it seems that Toowoomba's house market is tightening up again after the slight relief in 2023 and 2024. It could be boosted by the sentiment recovery as interest rates come down. Chart 6, new supply trend over the past 10 years. Over the decade, Toowoomba's building approval rate has been around 2%, quite balanced. Also, considering the robust population growth, I don't see oversupply risk in Toowoomba anytime soon. Chart 7, long-term growth. As we mentioned before, Toowoomba's last 5-year growth was quite impressive, 79% in total. But if we look at the last 10-year growth, it was only 84%, and that's approximately 6.3% per year. That is well in line with the 5 to 7% per year long-term average growth. So given the high and increasing market pressure now, I believe there is still a good amount of growth to come for Toowoomba. As I mentioned, pressure in the rental market was also increasing, and that can be seen in the declined vacancy rate. Rental vacancy rate in Toowoomba increased from 0.4% in 2022 to 0.8% in 2024. And since early 2024, it has come down to 0.6% again. 0.6% is crisis level. It does show consistently high housing demand or rental demand compared to limited supply. And that also explains the steady rental growth over the past year. Now, rental yield. Rental growth was steady over the past few years, but it's not as fast as price growth. And that is why we see this constant decline in rental yield in Toowoomba. Now it is around 4.5%. If you're thinking of buying in Toowoomba, don't be sad that this rental yield is not as high as where it was a few years ago, or not as high as many North Queensland cities now. Consider two things. One, as interest rates come down, 4.5% will seem much healthier than when we had really high interest rates. And two, high rental market pressure means further rental growth. So even if you buy a property at 4.5% yield, your yield on purchase will be improving soon as your rents grow. And then long-term rental price growth. Surprisingly, Toowoomba's 10-year rental growth wasn't as high as the average level of top populated regional cities, although the difference wasn't really high. And now, as Toowoomba's rental market pressure is still high, I believe this difference between the blue line and the green line will be further shrinking in the coming year. So what's going to happen in the next 6 to 12 months in Toowoomba? As we've seen in the 10 charts, Toowoomba's local economy is strong, population growth is robust, the sales market pressure and the rental market pressure are both high and also increasing. So in the short term, it's very likely that Toowoomba will keep the healthy growth pace. And I won't be surprised if it even speeds up a bit, considering the boosting effect of the dropping rates. So that is Toowoomba in 10 charts. I hope you enjoyed it. If you have any questions or any feedback, please leave your comments below. I'm Junge, the Senior Research Analyst here at InvestorKit, and I'll see you next time.